Hi, good evening, sir. Today I'm going to present a video presentation on the behalf of my individual assignment. I'm Sailesh Vester, having the student ID number PFEC 2206. Today I'm going to present a video on the concept of accounting taxation under the income tax. Uh, as for the topic, this this accounting system includes this PD presentation is going to be discussed on under the about the learning and understanding of the accounting principle for the income tax and other taxes being included in income tax which are being charged and follow in real world. The concept of accounting taxation can be fixed as financial expenses being changed by the government of the taxpayer, which are divided into two parts, that's direct tax and indirect tax. Direct tax usually imposed when the taxpayer or the burden of the amount is paid by the individual, whereas the indirect tax is the major and the main tax of the direct tax. And this usually increase the focus on the financial and the tax reporting pattern of the treasury, while instead to make this concept and understanding in easy manner, and it implies on the financial frameworks while recording and processing along with the assessment of taxation policies. This topic we're gonna further discuss about the various terms such like accounting profit, taxable profit, recording of accounting for income tax, accounting for tax and tax objectives, timing difference, temporary difference, taxable temporary difference, deductible temporary difference, deferred tax liability, deferred tax assets. Just like the accounting profit, what we can say that this is the simple term which is result of analyzing the income and the expenditure done in the organization. Similar taxable profit that refers to the profit of the organization which is used as a base assessment. Similarly, then timing difference is the difference between formal statement and the document of tax return gives birth to the variation which are recorded to the organization. Deferred tax temporary difference is the variance or the difference which can be noted due to the difference named as temporary difference. Taxable temporary difference refers the difference which arises due to the difference in the time, whereas the deductible temporary difference is the amount which is currently not taken into the consideration while calculating the tax amount but will surely deducted within the coming next year. And recording to the accounting for the income tax helps to determine the tax and related accounting policies in the organization. Similarly, recording to the accounting for tax and tax objectives determine to achieve the maximum profit in the organization. Similarly, deferred tax liability. The deferred tax liability company pays lower and about the of tax current year due to the amount of profits. And the criteria for recognition of deferred tax assets and the criteria for recognition of deferred tax liability. Under the criteria of the deferred tax assets is when the amount of carrying asset is high as when compared to the tax basis refers to the deferred tax assets, whereas when the carrying amount of the asset is lower than the tax base is called the deferred tax liability. As you can see from the table here, the taxation for the treasury wine forest, it is clear that the books of the account of company mark that income tax expenses is 171.5 million in 2019, whereas which is the higher of 2018, that carries the 115.1 million. Similarly, in 2019, the figure of the income is 156.7 million, and the amount of deferred income tax of expenses of 14.8 million. The amount of the figure for the 2018 is 106.6 million for the tax expenses and 8.5 million for the deferred expenses. Similarly, we can see here. Similarly, we can see from this table, it is clear that accounting rules and the taxation rules, it is clear under this rule that income tax is calculated on with the multiplication of the income tax we earn with the tax rate. The income tax rate is usually that the treasury wine estate is 30% for both year 2019 and 2018, which earns nearly 591 millions for 2019 and 481.7 million for 2018. Similarly, in both year 2018 and 19, above formula is 177.3 million and 142.7 million respectively. While going through financial treasury wines, it is clear that income tax expenses is 171.5 million in the year 2019 and 115.1 million for the 2018 years. From this table, the deferred tax assets and liabilities can be we can find here. From deferred tax liabilities for the treasury wines, this table states that the amount for the 152.3 million in the 2019 and the 2018 it includes the 154.5 million. The company also reports the figure of deferred tax liability in the 2019 amount in 194.1 million and 190 million in 2018. The amount of deferred tax is recognized with the presence of allowable temporary deduction. Similarly, on the tax payable for the treasury wines estate, the current amount is natural amount 156.7 million and 106.6 million in the 2019 and 2018. For the cash flow and its variance of the treasury wines estate, this statement does not record the transactions which are based on the future frame. The statement of the company shows the payment of 112.5 million and 93.7 million in the year 2019 and 2018 respectively. Moreover, in the expenses are reported as 171.5 million in 2019 and 118 its sums of 115.1 million. At last but not least, the permanent difference and the temporary difference items. Permanent difference which are invariable in the nature is permanent difference item, and the difference which is zero after a period of time is temporary difference item. The temporary difference item brings positive within the business. And finally, I like to conclude this income tax will help to reduce the organization for the treatment of income tax are discussed in this document. This concept and manner of examination of the tax is going to assist while the using or drafting the financial of the organizations. This is much for today. Thank you. Hope you get something. Thank you so much.